things feel so festive for Pete's sake today. We have Santa Pete is back. It's my favorite time of the year. Peter, how good to be back with you.
Nice to be here.
Well, on a serious note, Peter, we'll be exploring some tax options investors may have with the precious metals, but I'm happy that you're back in studio today to talk about all this action we're seeing in the gold market. It's recaptured the 1,200 level, silver doing well as well. Peter, let's talk about what we're seeing on the metals front.
Yeah, I mean, we were looking at this market for the past few days, and it seemed extremely resilient to me. Stronger dollar, much weaker oil, strong stock market, and gold held. And every time it weakened off a bit, there was buying interest. And I suspect that the risk here between now and the end of the year is to the upside. We're looking as we speak right now, gold at $12.25 and silver broaching, if it hasn't already broken, $17.
So do you think we'll remain range bound here till year end, Peter?
This is a difficult time, as I said this morning in my commentary. The fund managers that are short this market, may want to lock in their profits, which is going to create some buying in a very, very thin market. And there's going to be some capital allocations as some of the people take money out of the stock market that's had a phenomenal year and reallocate some of that capital into metals. So it's going to be very, very volatile over the next 2 or 3 weeks. So I can't, as I said this morning, it's difficult to discern whether this is a new trend. I think the macro trend for next year will probably still create headwinds for the metals. But short term, I think there's potentially some more lift.
And Peter, offline, you were telling me something interesting. You were saying that since gold and platinum are trading so closely right now, that investors could potentially use these metals as a tax loss strategy.
Mm-hmm. I mean, that's something you want to speak to your accountant and find out what the exact rules are. But generally, the rule is if you sell an investment from a tax loss perspective, you can't re-enter that same investment for 30 days. And that would allow you the tax loss. So, people holding gold potentially, at much higher levels, 14, 15, whatever price, could sell their gold here, take a tax loss. But then they risk, well, I'm not in the market. So how do they protect the fact that they're now out of the market? A good strategy for that would be to consider selling gold and buying platinum. Platinum's owned currently at about a $20 premium to gold. And in my mind, somewhere throughout 2015, that premium will at least once, if not a number of times, be at least 100 or higher relative gold. So you could sell your gold, take your tax loss, buy platinum so you're still in the market, wait the 30 days, and then reverse the trade. So you still have your underlying position, but you're able to maximize your capital loss.
Now, is this something that's commonly done?
It is. I mean, anybody that's a professional does that. It's a very common practice. I mean, if I had a tax loss in gold and I had a tax gain in my equity funds, I could offset the two by taking my tax loss in gold and applying it to my capital gain in my equity funds. From a professional perspective, it's done all the time.
Now, would the same apply for silver and gold?
It is. It's just a little bit more risky. Currently, the ratio is still trading around 72 to 1, so it's worth the risk, in my opinion. So if you're holding silver at a significant loss, if you got in over the last 2 years at 20 or 30 plus, and silver's now trading at $16, $17, you could take your tax loss in silver. Again, you're naked, so you need to hedge, so you'd buy gold. You don't have the same risk reward relative gold platinum, but I still think it's worth considering.
Now, Peter, I just want to get back to the gold price right now, and as you know, we've had an increase in viewer feedback, especially with all the volatility we've been seeing. And a lot of viewers were asking, do you think it's the fundamentals that are really driving the gold market right now, or do you think that there's something else at play?
Well, I do think the general macro fundamentals have been negative for gold and have been negative for gold for the past 2 years. We've been, other than calling for reversals and, rallies within a bear market, we've been relatively negative this market for the past 2 years on the basis that the U.S. economy was much further advanced than the European economy. And that suggested to us that capital flows would go into the dollar, which is generally negative for the commodity index in general and gold specifically. You've still got that scenario on a macro picture. You still have Europe behind the U.S. in growth. The Europeans are still being more expansive in their monetary policy, whereas the U.S. is looking possibly to raise rates as early as mid-2015. Still makes the argument for a stronger dollar going into 2015, and probably even a weaker oil price going into 2015 with the supplies that are in the market, which are going to be headwinds for the metals, assuming no major new news.
Now, speaking about the U.S., we've seen more and more positive economic data come out. We have retail sales this week. What are you expecting, Peter? More positive?
I do. I expect if there's going to be a surprise, it'll be to the upside. It hasn't quite fed into the market yet, but lower oil prices is certainly translating to much lower prices at the pumps. Consumers are starting to believe that might hold for a bit and, might give them the incentive to go out and spend some of that extra income that they've saved now at the gas pumps. So I think retail sales coming in through the balance of the year should be more to the upside on a surprise basis than disappointing.
Well, I think we can expect many more surprises and excitement, especially in the gold market the next few days. And next week, you'll be back with us for your Outlook 2015. So we'll get Santa Pete's thoughts on the gold and silver market and platinum and palladium for next year. So Santa Pete, thanks for stopping by.
You're welcome.
And thanks for watching this edition of For Pete's Sakes, starring Santa Pete. He comes back every year. You can email us any comments or questions at newsfeedback@kitco.com. Thanks for watching.